The top business stories live from the Sky News City studio. Uber announces its first full-year operating profit as a listed company. A big takeover in the house building sector as Barratt-Redrow agrees to buy its rival Redrow for £2.5 billion. Plus from Plasto to Hollywood. I've been speaking to the British businesswoman who's become one of America's richest self-made women. Good afternoon, this is Business Live with me, Ian King. Uber has announced its first full-year operating profit since it listed 5 years ago. The San Francisco-based company reported an operating profit of $1.11 billion for 2023, up from a loss of $1.83 billion in 2022 and ahead of Wall Street forecasts. Sales for the final 3 months of 2023, meanwhile, came in at $9.9 billion, up 15% on the same period a year earlier. The company is planning an announcement on capital allocation plans next week, which has raised hopes of a possible dividend or share buybacks. But the shares have fallen by 1% in early trading. Well, I'm joined now by our technology correspondent, Arti Natchiappan. Arti, really quite a turnaround, this.
It really has been a big turnaround for Uber over the last year specifically. Since it started announcing the details of its finances publicly in 2014, there have been years and years of losses, and it's racked up about tens of billions of pounds worth of losses in that period of time. But from the second quarter of last year, things started to pick up. Its main offering is its ride-hailing service, and that really suffered during the pandemic, specifically because people weren't going out during lockdowns. However, there has been a rebound in consumer demand since then, and Uber's also benefited from the success of its expansion into food delivery with Uber Eats. The company is also crediting its efforts to boost profit margins by aggressively reining in costs and also increasing prices. You mentioned some of the figures there, the increase in operating profits of $1.1 billion compared to a loss of $1.8 billion the year before. Revenues also grew by 17% last year, and this is following a 24% jump in Uber journeys. So I think that shows just what a core part of the business that is. The company did a briefing earlier today, and the chief executive, Dara Khosrowshahi, spoke to investors, and this is what he had to say.
We continue to see consumer strength, and especially consumer strength as it relates to services. People are going out to dinner, they're going out to concerts, sports events, etc. And when people go out and they spend money, or when they want anything delivered to their home, Uber benefits, which is why you've seen gross bookings of $37.6 billion, up 22%, which is actually an acceleration over the last quarter.
Yeah, quite a turnaround there. I mean, Dara has to be credited for the way he's really executed a recovery in that business. I mean, Arti, for as long as I've covered this stock, it's always had the priority on growth rather than growing profits. As you say, it's become less promotional over the last 12 months. Is profits going to be the priority now rather than growth?
I think that what we've seen from the recent results is that growth still needs to be a priority, particularly because the areas that Uber is in are very susceptible to price wars, and they're very susceptible to competition and new companies popping up. In the latest figures for the final quarter of last year, we saw that price cutting by Lyft, which is one of Uber's main rivals, did eat into its growth in ride-hailing, and also on the food delivery side, DoorDash ate into a little bit of growth there. So I think that what we've seen over the last couple of quarters is a consolidation and a bit of resilience in what investors expect from Uber, and the fact that they now see it as a profitable company. There's more of a boost in hopes for a share buyback, but it's a really tricky time for Uber because they really have to harness both going forward and show that they can continue to be a profitable company while not losing out to competitors who are more able to offer lower prices.
Yes, I think Lyft updates the markets next week. Arti, thanks for that. Some other business news stories for you now. And the house builder Barratt-Redrow is to buy its smaller rival Redrow in a deal that values the latter at £2.52 billion. The all-share takeover brings together the UK's 7th largest and 2nd largest builders by stock market value, and would see the enlarged Barratt leapfrog the biggest current player, Taylor Wimpey. The enlarged business would build around 22,000 new homes a year based on the pair's recent performance. Under the terms of the agreement, shareholders of Barratt will own 67.2% of the enlarged business. Steve Morgan, Redrow's founder, who still owns 16% of the company, is backing the deal. Well, David Thomas, the Barratt chief executive, said this is an exciting opportunity to bring together two highly complementary companies, creating an exceptional home builder in terms of quality, service and sustainability, able to build more of the high-quality homes this country needs. Well, for more on that story, you can scan the QR code on the screen right now, and you can read my analysis on the Sky News website of that takeover. So do have a scan of that code now if you want to know my thoughts on this very big deal in the house building sector. The newest member of the Bank of England's Monetary Policy Committee said today she was less concerned about persistent inflationary pressures in the UK and the possibility of interest rates having to be raised again. Sarah Breeden said her focus now was on how long interest rates would need to remain at their current level. However, speaking at a UK Women in Economics networking event, she said she would need more evidence that the UK economy was performing in line with the bank's forecasts before cutting interest rates. And shares of Roblox jumped by nearly 13% today after the gaming platform reported better than expected quarterly results. Roblox, which is used by more than 70 million people worldwide every day, reported bookings, that's a measure of sales of the virtual currency on its platform, of $1.13 billion for the final 3 months of 2023. That was up 25% on the same period in 2022. Roblox also forecast bookings of up to $4.28 billion for the whole of 2024, again ahead of Wall Street expectations. Now, Emma Grede grew up in Plaistow in London's East End, doing a paper round to earn money for buying fashion magazines. She's now one of America's richest self-made women, according to Forbes, and a friend of the Kardashians. Co-founder of the denim brand Good American and the shapewear brand Skims. She was in London this week and popped into our city studio. I began by asking her how her two fashion businesses are trading just now.
They're doing incredibly well. You know, I'm very, very lucky that I have two brands that, despite everything that we've been through in the last few years, have actually done incredibly, incredibly well.
Why do you think you've managed to overcome, what's been quite a difficult environment for consumer spending?
Well, I think right now that brands thrive when they have mind share, and we've been extremely lucky, especially when you think about Good American, what it means to a certain consumer. It's a brand that's rooted in a purpose. And I think if you want to have cut through and you really want to chime with consumers now, you've got to stand for more than just, whatever it is you sell. People are buying with their heart and their soul and their intentions. And so you have to mean something to a certain consumer. And I think we've done a very, very good job of actually having meaning beyond what we're selling.
I mean, Skims obviously started out as online only, but you moved very quickly into having retail distribution, and you even launched pop-up shops here in Europe last year.
Oh, yes, we do. I think those businesses, and it's been really interesting because there was such a direct-to-consumer bubble, and post-COVID, what was really obvious was that people wanted to get back into the shops. They wanted that, one-to-one interaction, and I think when I think about the growth and the future of the brands, we've just opened 3 stores in less than like a month with Good American, and people want that in-person interaction. They want the service component, and so really reimagining what that means from being a, direct-to-consumer business to now being something that has its own bricks and mortar. That's really the next evolution of the brand, I think.
I mean, Skims obviously started out in shapewear, but you moved quite rapidly into other lines. What informed that decision?
Well, I think with any business, what you've got to do is listen to your consumers. And what we do spectacularly well is listen. And the great news is that we've got so many avenues to get that feedback. So when you think about social media and being a truly digitally native brand, we just have to listen to our customers. They're always speaking. The issue is they'll tell you anything. It's like the good, the bad and the ugly. And so I think that what's important is really listening and tuning in to that consumer feedback. And that really sets you up for success.
I mean, you operate on a drop model where you drop new collections regularly.
All the time.
Does that risk alienating customers when they can't always get what they want because collections sell out?
Well, I think that when you think about the reality of the business, just like more traditional businesses, they operate with a core product. At Good American, I sell black, blue jeans and, white T-shirts. But just, consumers have a very, very short attention span. And so giving that idea that there is consistent newness and a reason to come back to the site is really about driving traffic. The underlying business is that you're going to sell a lot of blue jeans and white T-shirts.
There was a lot of speculation at the tail end of last year that Skims might IPO this year. Is there anything you can say on that?
No, I cannot. Listen, I think that, we've said it quite a lot in the press that that is a company that deserves to go public. And when the time's right and when Kim and Jens, the CEO, decide that that's the right thing to do, I'm sure, there'll be that moment in time.
But, I mean, it's not as if you need to raise money. You've raised money very successfully on the private markets. What would be the benefit of an IPO?
Well, there's always a reason that a company would need to IPO, but I think that I don't want to speculate about that business. When the time's right, we'll make the next decision. Right now, we're having an amazing time building that company into the company that it really deserves to be, and we're having a lot of fun doing it.
But that's it. I mean, if you were to IPO, you'd potentially lose a bit of control. You've got shareholders in there.
That's part of it. And I think when you go out and you raise a lot of money, there is that element. It's not really about losing control, but, I have a fiscal responsibility to that business and to any business that I'm part of, and not that much changes. You're always trying to do the best you can with any business. And I think that as a CEO and a founder, I have, I guess like an enterprise first mentality, and that doesn't really change regardless of where the company's at.
Now, you've got a third brand underway now as well, Safely. For people who aren't familiar with it, tell me about that.
Coming out of COVID, that brand was really completely conceived during that moment where, we'd kind of gone, certainly in my house, from removing every bit of plastic, having no toxic chemicals, and then the pandemic rolled around and I was like, where's the devil? It's like, let me kill every germ. And as a mother of 4, I'm really obsessed with that idea of what it means to be as environmentally conscious as you can be, but also, being cost conscious. And so Safely really rolled around as an idea to answer a question of, what is safe for you, safe to clean with, safe for your children, and, what's going to do the job without using harsh chemicals. And so we created this incredible brand, which is all about plant-based cleaning, and it exploded. It's had incredible, incredible growth.
You're up against some fairly big beasts, though, the likes of Unilever, Reckitt. I mean, do you think this market's as able and open to disruption as some of the other markets you've been in?
Well, I think what's really interesting is it's a pretty stale market. We all buy the cleaning products that either our parents bought or we were raised with. It's not really like that choice you make to go out and find like a new washing up liquid. And actually, I think that these are the products that we use in our everyday lives. And the whole idea about Safely was to elevate your everyday. Everyone has to do the cleaning. Everyone has to wash up. Everybody has to clean down their surfaces. So why not make it a nicer experience and a choice? And so I actually really enjoy being in spaces that aren't heavily disrupted, because it means that there's a huge white space opportunity to get in and do something that's a bit more interesting.
Now, you've also headed something called the 15% Pledge. For those who don't know about it, what does that involve?
So I'm really happy you asked me about that, because it is a part of what I do that is so important to me. And as a black female founder, I am very, very aware of the barriers to entry, and especially when you look at markets like the US, where there is so much funding out there, and yet only 1% of funding goes to black-owned businesses. And the premise of the pledge is very, very simple. It's a non-profit organisation that is really, really focused around asking retailers to dedicate 15% of their annual buy or their shelf space to black-owned businesses. And I think the premise is so simple, because the idea is that black businesses are for everybody, not just black people. If you create a hair care brand or a beauty brand or a clothing brand, that is made for absolutely everybody out there. And so it's just about matching access and opportunity with the retailers so that these brands can be given a fair shot.
You've been in the US since 2016. Can you ever see yourself coming back to the UK and running a business here?
Oh, I mean, never say never. I ran businesses in the UK for 15 years. I started my first company when I was 24. And so, I dream about coming back here one day. And of course, I do spend a lot of time here, but my kids are in school in the US, and, it's kind of worked out pretty well for me so far.
Yeah, I didn't get the impression she was in a rush to come back here. Still to come here on Business Live. We'll take a look at how the markets have done this afternoon. Don't go away.
Martin Brunt, and I'm Sky's crime correspondent. My most memorable story was, and still is, the disappearance of Madeleine McCann.
Please, please do not hurt her. Please give our little girl back.
We aim to be the best and most trusted place for news.
For detectives, the first 48 hours after a murder are crucial in the search for clues. The public expects them to find Jill Dando's killer soon. The British detectives are planning to meet forensic experts, academics, and even witch doctors.
I remember the grimmest case, the Soham murders of schoolgirls Holly and Jessica. I felt I can't undo what's happened, but I can help explain it.
Ian Huntley was arrested and charged within a fortnight of the murders.
I've never murdered anyone, I've never raped anyone. What am I in jail for?
The parole board has to decide if Bronson needs to be kept locked up for the safety of the public. My biggest challenge was to persuade a jailed diamond thief to answer my letters. Martin Brunt, Sky News, at the Old Bailey.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. It's like Emirates, it's like better.
Welcome back. Time for a look at the markets. And the pound has risen on the foreign exchange markets today after the Halifax reported that UK house prices rose in January for the fourth consecutive month. It's seen as making early interest rate cuts from the Bank of England less likely. Sterling currently a fifth of 1% higher against the US dollar, tenth of 1% higher also against the euro. Meanwhile, the single currency is up an eighth of 1% right now against the greenback. Here's how the equity markets in Europe have finished this afternoon. All the main indices in negative territory. That followed a mixed bag of company updates and news that German industrial production fell in December for a seventh consecutive month. Talking points include the Norwegian gas giant Equinor, which has fallen by 7% on a disappointing earnings update, while in the same sector, the French oil and gas major Total Energies is off 3% in Paris on its results. Among the gainers on mainland Europe today, Carlsberg is up nearly 5% in Copenhagen. after the world's third largest brewer issued a trading update that was well received. Here in London, the FTSE 100 has finished in negative territory, off 0.2%. The big dollar earners are weighing on the index there. In percentage terms, the leading blue chip faller is Sainsbury's. That's finished off by just over 6%. It had a big strategy update today, and an increase in capital expenditure that was announced that was not terribly well received. Also to the downside, Barratt Developments off 5.5% on its takeover of Redrow. That is to be expected. The arbitrageurs will always buy one and sell the other. To the upside, Smurfit Kappa is ahead by some 3.5% on a trading update. Its rival DS Smith is up by almost as much in sympathy. Outside the FTSE 100, Redrow is the leading mid-cap gainer, no surprise there, up 14.75%. Crest Nicholson up 4.5% and Bellway up nearly 3%, also up on the back of that news. To the downside, the shower gel and hand wash maker PZ Cussons has fallen by nearly 16.5%. That was on a big drop in profits and a cut in the dividend. Over on Wall Street, all of the main stock indices have opened to the upside. The S&P 500 has hit another all-time high this afternoon. Talking points include Snap. That's currently off some 34.5% after a results statement disappointed investors. But Ford is ahead by 2.5%. That's after the car maker raised its quarterly dividend. The oil price has been in positive territory all day following news last night of a smaller than expected build in US crude inventories. A barrel of Brent crude will currently set you back $79 on the nail. That is up a little over 0.5%. Well, joining me this afternoon is Freddie Cahoon, Investment Director at JM Fin. Freddie, good to see you. Let's start with Sainsbury's, because this was a big update. They'll be quite disappointed with the reaction, won't they?
Yeah, I think that's right. So they had their Capital Markets Day today, which was quite a big event for the company, and then quite a big announcements as well, big numbers in it, forecasting forward for the next 3 years. And essentially, the highlight for shareholders really, I think, was the potential 200 million share buyback programme that they're going to put through next year, and a progressive rising dividend for the next 3 years. That was the good news. But as you said earlier, I think it's the CapEx plans that have caught the eye, really.
Yeah, but why are investors so dog in the manger about this? I mean, so many companies right now are buying back their shares because they can't think of anything to do with the capital. Sainsbury's has said, right, well, we've got lots of ambitions here, 850 million we're going to spend on growing the business, and the market just doesn't seem particularly excited.
Yeah, that's it. I mean, I think investors always are a bit suspicious of CapEx plans, especially looking ahead for 3 years. Ultimately, the idea is for shareholders to get a return on that CapEx. And, Sainsbury's will be putting the majority of that CapEx into their convenience stores, so adding to their portfolio of stores. I think they're going to put through about 75 new stores into the portfolio over the next 3 years. But they're also going to invest in a lot more electric charging points in their car parks, which is good news. Certainly for the infrastructure rollout for electric car vehicles, but it's just the question of when investors will get a return off that CapEx, which is the key focus.
Yeah, I mean, they didn't give us any kind of numbers on return on capital expected from any of this, did they? So.
No, they didn't. But what they did say is that they're looking at cost cutting. Their big numbers came through on £1 billion of cost savings over the next 3 years, so circa 300 or so each year. And also free cash flow, that's another very important metric. That's about 500 million each year coming through. Now, some of that will cover the CapEx plans, of course, but also, importantly, the shareholder distribution of 200 million and an increasing dividend. So, I think the market was perhaps expecting a little bit more. That's why the shares have fallen back today. Bit of travel and arrive, perhaps. Yeah. But I think management might be a bit disappointed, yeah.
Now, of course, the big M&A, probably the biggest piece of M&A we've had on the London market for months. Barratt's buying Redrow. It's fair to say the market likes this one.
Yeah, it's all eyes on the housing market and then the house builders today. I mean, the first thing to say is that the house price index from Halifax showed a 4th consecutive rise. That's ultimately good news. And also, I think that feeds into the narrative into the house builders, because there's actually been a pickup in trading over the first few months of this year, particularly for Barratt. And actually, Barratt, I think, is a bit short of land, ultimately. And so what they've decided to do is actually buy land off Redrow, ultimately. It's going to add about 25,000 plots, which will take them up towards the level that Taylor Wimpey and Persimmon are at.
Yeah, pricey way of buying land, though.
It's a pricey way of buying land, but ultimately, if we're going to get a recovery in house prices, and if people are feeling a little bit more confident with falling interest rates and also rising real incomes, importantly, then these house builders need to make sure that they've got enough land. And so what will be interesting is seeing some of the other players in the sector do now, like Bellway, Barclays, how are they going to respond? They should probably be looking at their land banks as well.
Yeah, do you think this is going to get past the CMA? Do you think they'll have a sniff around?
So the second largest is buying the seventh largest. I think that puts them, so as I said, on par with Persimmon and Taylor Wimpey. I think it should go through.
OK.
Yep.
Now, elsewhere today, PZ Cussons, mentioned this earlier, an absolute shocker of a profit statement. It's all down to devaluation of the Nigerian currency.
Yeah, that's it. So actually, the operating numbers for PZ Cussons were pretty good in the first half. So like-for-like revenues were up in a small way. Operating margins were improving. But as you say, it was all down to the devaluation of the Nigerian currency. It's devalued 40% over the last week, having been weak up until that point. 35% of PZ Cussons' business is in Nigeria, so it's quite a big impact there. So, as you said at the start, they've cut their dividend in response as well.
Yeah, so, I mean, it all seemed to have been going so well under their newish CEO.
Well, if you look at the share price over the last 10 years, it might not paint such a positive picture. However, it is a consumer goods business ultimately in a reasonably fast-growing area of the world as well, in Nigeria. But you are at the whims of currency devaluation if you do operate out in these countries. Yeah.
OK, Freddie, got to leave it there. Good to see us ever. Thank you. Just before I go, a reminder, don't forget to check out my analysis of what the big house building takeover news today means for the actual delivery of homes in the UK. We're trying to get the CEO Barratt on at some point to talk about that. Talks are going on at the highest possible level, I can assure you of that. So have a scan of that QR code right now for my analysis. In the meantime, do stay tuned. Coming up next, it's Mark Austin with the News Hour. I'm back at 11:30 tomorrow. Cheerio.
It's 5 o'clock. I'm Mark Austin. This is the News Hour. 60 minutes of news, analysis and interviews. We begin right now with the top stories this hour. Ceasefire in the balance. It's a crucial night in the Gaza crisis as the world awaits a deal. But an end to all this may still be some way off as big differences remain between Israel and Hamas.
We've just reached the centre of Khan Yunis. It's just been captured, taken by the IDF. It was clearly, I mean, just look around, clearly a very, very heavy battle here.
We're expecting the Israeli Prime Minister to hold a news conference this hour. The other main stories at 5. Pay up for the medical scandals, says a report, but victims fear they'll never see their compensation. And Sunak's blunder over Brianna as Labour demand an apology.
Of all the weeks to say that, when Brianna's mother is in this chamber, shame.
Good evening. As we come on air, it's clear that the next few hours could be highly significant for the future of the conflict in Gaza in response to a framework deal thrashed